Bitcoin has slumped to below $20,000.
Cryptocurrency is plunging.
The great crypto crash.
Bitcoin news today. The finance world is finally abuzz with the news of Bitcoin and other cryptocurrencies. What are cryptocurrencies, and what do investors and potential investors need to know about them? In this video, I will share the latest on Bitcoin news today and experts' opinions of their future value. Watch the video till the end to get more insights into Bitcoin news today. Welcome to Crypto Dogmas, our one-stop for all your crypto fixes. Here you'll find our views on everything related to crypto market analysis, education, NFTs, metaverse, perspective, and opinion about the cryptocurrency market. If you enjoy watching this video, don't forget to like and subscribe to the channel so you don't miss out on more informational videos about the cryptocurrency market. Before we start, we need to say a small disclaimer. What you are about to see is mainly our views on the cryptocurrency market and should only be used for information and entertainment purposes. Crypto Dogmas do not provide financial advice. Okay, now that that's out of the way, let's get started. Let me emphasize that since Bitcoin came into existence, there has been much curiosity about the vastest holders of the cryptocurrency and their merits. Committed websites track the addresses of the rich catalog, which, according to the paper, is one of the most well-known and widely followed charts in the crypto community. The manuscript states that most large addresses are cold wallets of commerce and online wallets, which hold Bitcoin on behalf of numerous investors. Personal investors held 8.4 million Bitcoins at the end of 2020. According to the manuscript, the prime 1,000 investors control nearly 3 million BTC, and the top 10,000 investors own approximately 5 million Bitcoins. Bitcoin utilizes peer-to-peer technology to regulate with no fundamental administration or banks. The system carries out organizing trades and issuing of Bitcoins. Bitcoin is open source. Its technique is social, nobody owns or regulates Bitcoin, and everyone can participate. Through many of its unusual properties, Bitcoin enables exciting uses that could not be covered by any prior payment policy. Bitcoin, BTC, is leading a new era in global finance. It's mostly related to digital currency and as a variation to central bank controlled via stock. Regardless, the latter is productive because it is published by a monetary administration and is widely used in an economy. However, Bitcoin's network is decentralized, and the crypto is not used much in retail transactions. Crypto fanatics have long examined who Bitcoin's biggest owners are since its early days, but unfortunately, it can be almost impossible to determine the attention of possession, as many of the vastest addresses don't often represent individuals but exchanges and other commodities that hold Bitcoin on behalf of distinct investors. One can contend that Bitcoin's importance is related to that of precious metals. Both are restricted in amount and have particular use circumstances. Precious metals like gold are utilized in industrial and treaty, while Bitcoin's underlying technology, the blockchain, has some applications across the financial services enterprises. Bitcoin's digital provenance implies that it might even be a medium for retail transactions one day. This engagement ratio is most likely an understatement, since we cannot rule out that some of the vastest addresses are regulated by the same commodity. As we all know, you'd agree that Bitcoin is the largest cryptocurrency by market cap and an excellent public pointer of the crypto market, since other assets like ETH and smaller altcoins tend to pursue its trends. So even though Bitcoin set another modern all-time high, it was a usual delightful uptick for the crypto, which is famous for its volatility. That's not to say investors should take a switch in either path lightly, and this is also why instilling specialists advise not making any vital investment changes based on these normal instabilities. Mining of Bitcoin. Bitcoin is, without a doubt, the most widely utilized cryptocurrency today. It was created as a premium for the mining procedure, which pertains to an international system of computers competing to understand complicated algorithms. Miners have been awarded 12.5 Bitcoins for adding one hurdle to the system. According to the Bitcoin policy, the payout will be slashed in half every 4 years. The stumbling profitability of mining urged these miners to improve their selling price to more than 100% of their product in May. The situation worsened in June. In essence, they are likely to trade more. Today, in Bitcoin ecosystems, miners who earn money are at the prime of the chain. Traders, the following link in the chain, strive to benefit from the Bitcoin to fiat progression by regulating it. The final link in the ecosystem is customers who use their coins to buy goods or services. Bitcoin and gold. Bitcoin is still in its infancy, As a standard of trade, gold has been used for a very lengthy period. Therefore, it is a safe stock regarding rate, needs, and supply. Furthermore, fiat currency has been through for some time. While trade rates between nations vary and are somewhat unstable, their values are, to a fact, predictable based on the publishing nation and the financial situations it faces. Although Bitcoin possesses a $60 billion demand cap at the moment, it is still nothing when described in relation to enormous global coin markets. Until the BTC market cap accumulates into the trillions, it is highly uncertain that it will be stable enough to function as an asset. Bitcoin's volatility. Bitcoin has only existed for a short time. It is still at the price discovery level. This means that prices will proceed to change as investors, users, and administrations work through the initial growing pains and concerns until prices solidify if a stable point can be reached. Since each Bitcoin will be valued higher with each passing day, the question of when to spend comes to be important. This might cause spending surges which will cause the Bitcoin economy to fluctuate quickly and unpredictably. Furthermore, since Bitcoins do not have a physical shape, they cannot be used in material stores. Bitcoin's rate fluctuates because it is impacted by supply and demand, investor and user sentiments, government regulations, and agency hype. All of these factors work together to build price volatility. Investors should trade with volatility because volatility is nothing new, and you should be safe with this if you decide to invest. Volatility can be indicated as an immature market. Anything from a celebrity tweet to new federal regulation can send prices spiraling. If Elon Musk posts and hashtags about Bitcoin in his Twitter bio, it sends Bitcoin up 10%. This unpredictability is part of why investing experts advise against investing vast amounts of your portfolio into a risky asset like crypto. Instead, many recommend keeping your crypto holdings to less than 5% of your total portfolio. For recent investors, day-to-day swings can seem shocking, but if you've invested with a buy and hold technique, dips are nothing to panic about. The most crucial thing any investor can do, whether they are investing in Bitcoin or stocks, is not just to have a plan in place, but to also have a plan they can stick with. Given its volatile nature, Bitcoin may assemble momentum again at some point in the fate, perhaps weeks, months, or even years down the line. But no one has a crystal ball, so it's difficult to say whether Bitcoin will crash in the future. Regulations on crypto. Also, in Bitcoin news today, President Joe Biden approved an administrative declaration on crypto, signifying the first concrete steps by the White House to regulate digital currency. The executive order outlines what government agencies, including the Treasury Department, need to do to formulate policies and regulations on cryptocurrencies. It also calls on agencies to ensure the country's cryptocurrency laws align with U.S. allies and tasks the Financial Stability Oversight Council with analyzing any illegal financial interests. Besides, the order puts new urgency on the possibility of a recent government-issued central bank digital currency. President Biden's recent executive order, ensuring accountable development of digital assets. The administrative ruling should be more like a call to action than a specific game plan. The order lays out a procession of non-controversial policy statements, such as we must protect consumers, investors, and industries in the United States, and we must support technological advances that promote responsible improvement and use of digital assets. The White House seeks to balance the positives of crypto-economic efficiency, inclusion, and American leadership in global finance with its negatives, likely illegal financing, consumer and business misuse, and regulatory arbitrage. The executive order further requires a set of reports coordinated through the interagency method from a wide range of executive branch stakeholders. Historically, economic regulation is primarily in the hands of agencies with substantial structural independence from the White House. The order respects regulatory independence while making it obvious what the White House wants from the Federal Reserve Fed. Specifically, the Fed is encouraged to continue research and report on its job to potentially generate a central bank digital coin, CBDC. If you want to know more about central bank digital coin, CBDC, see a link to one of my videos in the top right corner. You would agree that with all the specs noted, Bitcoin is undoubtedly the big talk in everyone's portfolio. But we know some people will still have their reservations. The big question is, should I buy Bitcoins or not? Remember, Crypto Dogmas is not a financial advisor. So please do your own research before investing all your money. Let us know if you hold any Bitcoins in the comment section below. Don't forget to give this video a thumbs up and subscribe to this channel. Before you go, Check out our next video on more news about the cryptocurrency market. See you in the next video.